All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for a market bias update report for Sunday, July 13th. So, starting right off, looking at trading from last week, ended up having five total trades with three losses and two wins. Did a good job keeping my losses small relative to the wins. My biggest loss was 4,300. Biggest win was 9,850, so a little over double that. And that is basically what you want. Anytime you are trading, you want to have at least 2-to-1 reward to risk profile. So I ended up being within that perfectly well this week. Ended up locking in a gain of $13,012.50. So going out, looking at the charts, let's go out and start off on the S&P 500. S&P 500, we need to toss this out to a weekly chart to really see what's going on. And here we do have a long-term consolidation and overall resistance line here at around $612. We did break above that 2 weeks ago and then spent last week basically as just a little doji right at the top upper portion of that breakout. So we are definitely still above that breakout channel. We are overextended, however, on both the weekly and on the daily charts. So I'm not going to be surprised to see a little bit of stagnation here, a little bit of sideways action, maybe even coming back down to retest that 610, 612 level that we broke out of. And basically just seeing this go straight neutral for this coming week, although we do have a decent amount of economic data coming out this week that might nudge price a little bit in one direction or the other, depending on if that comes in as expected or if gives the market any kind of shock. Going out to triple Qs, the Nasdaq, basically the exact same thing. We are at that breakout channel just a little bit above. If we toss this back to a weekly chart, you can see that same doji candle right here. And again, basically just looking for neutrality. I don't have a lot of interest in buying right now as this continues to break out because our RSI is overextended both on the daily and weekly time frame on the Nasdaq as well. So ideally for me, again, just neutrality for a little bit and then lining a breakout above the 558 level for the triple Qs. Going out to IWM. IWM showing a little bit of a different chart pattern here. It often lags price action of the other two major indexes. And as we can see here, it is still quite a ways off from reclaiming its all-time high. All-time high is around $245, and it is currently at 221 and 70 cents. So we do have quite a bit of room for the small caps to play catch up. But again, the weekly is overextended and the daily is also overextended. The Russell 2000 tends to have a little bit larger price action sometimes. It's a little bit more volatile and reactive to news and economic data. So I am assuming that we are going to go neutral and or maybe pull back to the around the $216 mark, basically coming back down to the rising 20 period SMA, which is in blue, and this gray line is the 200 simple moving average. And that would be right down there around $216. If we do come down into that level with just normal day-to-day price action, no big volatility or anything like that, I'm going to probably be interested in looking at a potential buying opportunity once we see a pivot form around that 216 level on the Russell 2000. Going out to the Dow Jones. Dow Jones came back up and touched its all-time high price here right under 450, but has not broken out yet. It is overextended on the daily chart, and its MACD is actually starting to roll over and threaten signs of losing momentum within the bullish side of that indicator. So this purple line is the zero line. The MACD basically just oscillates back and forth over the zero line with anything being positive in the bullish territory. And when it is negative below that zero line, it is in bearish territory. So we're still obviously in bullish territory with the MACD, but we are starting to look at potentially a rollover here, signaling probably a little bit more neutrality and or a pullback back into the 20 period SMA, which would be around $435. So going to be continuing to watch for that. Going out to IBIT, the ETF that tracks Bitcoin, that I follow at least, we did end up getting a really nice break of this longer term channel, upper resistance line from that channel. Got some follow through this last week. And right now on the futures, if we go out to it, we can see that it is basically just hovering at the highs there. So going back to IBIT, the ETF, we are probably going to open right here around that 67.50 zone. And honestly, this is overextended enough that I'm not super interested in chasing anymore here. Two of my big gains this week were on Bitcoin futures. But once that pop happens and I take profit, I'm not super interested in chasing on it. I'm going to be waiting for either a little bit of consolidation and neutrality and then to line up a break of resistance or a shallow pullback. I really don't think we're going to get much pullback here because there is a lot of momentum and it is Bitcoin. It can really run when it decides to, and it has been consolidating for quite some time here, really going back to mid-May. So it does seem to me that it has room to run. I won't be shocked if it ends this week over $70 on IBIT. But again, I'm going to be looking for some consolidation before I trigger into any new trades. Going out to gold. Gold just still stuck in the mud. We ended up putting in a high here on April 22nd and have just been consolidating in this wedge pattern ever since then, threatening to break down a little bit. Honestly, there is so much strength in gold, especially with US dollar weakness that we have seen over the last few months, and we will get to that chart in a second, that I don't see this really rolling over and going south anytime soon, but I do think that we are probably going to continue to consolidate and go neutral on gold here just under the all-time high here at 317, probably for another couple of weeks. Going out to silver, silver has a different story, and this one we can see on the daily chart, really nice commanding breakout on Friday. But to put this in perspective, we need to actually go to our max monthly chart. And you can see here that that was a really, really important break right there. And that the only other time in history we have seen silver above that $35 mark was back in 2011 when we spiked all the way up to 48.35. So to me, I'm not necessarily targeting up to 48.35 because that might be a little bit extreme, but I do think the midpoint here around 42.75, and I say midpoint, it's not actually the midpoint of the breakout line to that $48, but it is the secondary resistance zone here. So we have our ultimate resistance at the all-time high, and then a secondary resistance zone right here at 42.75. So that's kind of what I am looking at for the target of this breakout over the next probably month and a half, somewhere right in there. So dropping back to our daily chart, and last but not least for the charts, going out to the US dollar. We put in a new lower low. That shouldn't be surprising since we are in a downtrend here. We are flirting with trying to break this diagonal resistance line, this red line right here, for the first time in this entire downtrend. So we are flirting with trying to cross above that resistance line. But to me, this has more work to come and do before I'm going to be interested in buying the dip on the US dollar. We are still below the 50-period SMA on the daily chart. And if we toss this out to a weekly chart, you can see we are not only below all of our moving averages, but still have a little bit of room to go until we even come up to test the decreasing 9 EMA. So until we get back above that 9 EMA on the weekly chart, I am just not interested in much here other than continuation of the downtrend. Now, going out to our heat map, this is our FinViz heat map showing money moving in and out of the major players in the S&P 500. This is showing price action for all of last week. And we can see pretty mixed bag here, a lot of different signals coming into the market. It is not a clear buyer's market because we are pushing all-time highs and we are overextended to the top side, meaning that people are basically having a harder time seeing good valuation for long-term plays at the high end of the chart. Now, that will alleviate if we get some sideways action and consolidate for a while, but for now, it's a mixed bag. Going out finally to our Forex factory, looking at the economic data coming out this coming week. Nothing on Monday or Friday, but a whole slew of information coming at us Tuesday, Wednesday, and Thursday that are going to be important to the market. So keep an eye out for these reports. All of these reports are going to be released at 5:30 a.m. Pacific Standard Time. So by the time the actual market itself opens, this will be priced in to that market open. So nothing is going to be interfering with our day-to-day trading, but we will be expecting potential volatility coming in that pre-market trading on each of those days, Tuesday, Wednesday, and Thursday. Now, finally, just wrapping up, wanted to let everybody know I am hosting a webinar on July 23rd. And this is basically going to be a webinar teaching you how to get started in the stock market correctly. There are three key things that I'm going to cover in this webinar that are major downfalls to a lot of people that try to get into trading, whether that is stocks, options, futures, forex, etc. It doesn't matter. This applies across the board. So I'm going to be sharing that on Wednesday, the 23rd at 6 p.m. And I will drop a link to that in case you want to register. It is a free event for July 23rd. So with that, I will see you guys next week.